All right, let's dive right into this explainer and unlock the mystery of what's really sitting inside America's most famous vault. For decades, Fort Knox has stood as the ultimate symbol of American economic security, right? It's the nation's ultimate financial backstop. But beneath the surface of that heavily guarded facility lies this growing, really fascinating debate about transparency, accountability, and the very nature of trust in our financial institutions. So today, we're going to look strictly at the data and the historical record to understand exactly why Fort Knox might desperately need a modern, independent audit. To really wrap our heads around the scale of this issue, we first have to look at the numbers. The United States government claims to hold a staggering $667 billion in secure gold reserves. I mean, that is not a typo. We are talking about an asset that literally rivals the GDP of entire countries, just sitting squarely on the national balance sheet.
And to put a physical footprint to that massive valuation, it equates to over 4,500 tons of physical gold bullion. To break that down, we're talking about roughly 147.3 million troy ounces of gold, stored primarily behind the thick concrete and steel of Fort Knox in Kentucky. It's the largest claimed gold reserve on the entire planet.
But here is the kicker, and honestly, it's a pretty shocking reality. This astronomical asset hasn't been independently verified in 73 years. Let that sink in for a second. For over 7 decades, an asset currently worth over $500 billion has sat there without a comprehensive, independent, third-party physical verification. And this single staggering fact, that's exactly why demands for a modern audit are growing so incredibly loud. Section 1. The $667 billion mystery. A lifetime without an audit.
Okay, so the timeline here really puts things into perspective. The last time the gold was meaningfully inspected was way back in 1953. I mean, Dwight Eisenhower had just become president, the Korean War had only recently ended, and Elvis Presley hadn't even recorded his very first song yet. Since that time, verification has relied almost entirely on internal government assurances. Sure, the Treasury's Inspector General conducts reviews, and independent accountants certify those internal schedules, but critics rightfully point out that, hey, reviewing a spreadsheet is entirely different from physically assaying, meaning scientifically testing the purity of, an asset of this immense scale.
And this perfectly illustrates the illusion of oversight that's kind of persisted over the years. You might hear people bring up 1974. That year, Treasury officials briefly opened Fort Knox to a crowd of reporters and politicians. But let's be real, that was a public relations exercise. They visually inspected just 1 out of 15 vaults for about 2 hours. Compare that to a real financial audit, which requires matching every single serial number against inventory records and doing a complete exhaustive physical count. A quick visual glance is definitely not a financial audit.
Which brings us to how officials handle questions about it today. When pressed recently, the Treasury Secretary offered the same unverified assurances we've heard for decades, stating simply that all the gold is present and accounted for. But critically, when invited to actually travel down to Kentucky for a public physical verification, the request was declined. Look, if you're managing the world's largest gold reserve, treating standard in-person asset verification as an impossibility raises totally legitimate, reasonable questions. Section 2. The crisis of public trust. Fiscal reality meets skepticism. The sheer scale of public doubt right now is massive. Surveys show that only about 10% of respondents firmly believe the gold exists exactly as stated, while a whopping 90% express genuine doubt or uncertainty. And honestly, this is a predictable, entirely rational response to 70 years of insufficient accountability. When an institution refuses meaningful, independent verification of a national asset for an entire lifetime, public skepticism isn't some fringe conspiracy theory, it is just the natural byproduct of a black box system. And we have to look at the broader context of why an audit is being demanded right now. This erosion of trust directly maps onto a timeline of fiscal decline. Just look at the progression. Since that last audit in 1953, the U.S. financial position has shifted dramatically. Starting in 2011 and culminating recently, all 3 major credit rating agencies have systematically downgraded America's sovereign credit rating.
And that brings us to the fiscal backdrop driving this demand for transparency. We're looking at a national debt surpassing $36 trillion, with annual interest payments now exceeding $1 trillion. That's actually more than the entire defense budget. With the national debt skyrocketing like this, every single asset gets scrutinized harder by global creditors. An unverified gold reserve becomes a symbol that just unnecessarily undermines confidence. Because if a government cannot transparently verify its most famous physical asset, creditors naturally start to ask, well, what else in the financial disclosures might lack proper verification?
Section 3. The push for transparency. opening the black box.
So what's the solution currently on the table? It's the Gold Reserve Transparency Act. Introduced by Representative Thomas Massey, whose district actually includes Fort Knox, by the way. This legislation mandates the first truly independent, full physical assay of U.S. gold reserves by an outside auditor, and crucially, it requires this to happen every 5 years. It enjoys bipartisan support, meaning this is officially shifted from a fringe concern into a mainstream legislative priority that demands full physical counts and public reports on any transactions from the past 50 years.
Now, complicating the accounting even further and adding yet another reason why an audit is so necessary is how the gold is actually valued on the books. The gold is carried on government balance sheets at a legacy statutory value, which is basically an artificially frozen price of just $42 an ounce. Obviously, that is completely disconnected from actual current market prices. This massive gap fuels speculation about whether America might eventually officially revalue its gold reserves to boost its balance sheet. So an audit is really step one in understanding exactly what asset base is actually sitting there.
But we absolutely have to acknowledge that executing this transparency is incredibly labor-intensive. It's not just walking into a room and counting a few boxes. A real audit means physically handling an estimated 368,000 individual gold bars. And get this, each of those bars weighs about 27.5 pounds. That is literally like lifting a gold-plated cinder block. They'd have to weigh them, scan the serial numbers, drill core samples to test the insides, and conduct independent lab testing on the whole shebang.
Because of this massive physical scale, the timeline is pretty significant. Experts estimate that the full audit and reporting process will realistically take between 18 and 24 months to complete. So we wouldn't even see results until 2027 or later, provided this legislation actually passes and doesn't quietly lose momentum like previous informal attempts. It's a massive logistical commitment, for sure.
Section 4. What could an audit reveal? 4 possible outcomes.
Let's break down the possibilities. Scenario 1 is a perfect match, confirming government records completely. This provides straightforward reassurance to global markets with minimal price impact. Scenario 2 involves minor discrepancies in weight or purity. Honestly, in an inventory of 368,000 physical bars, small statistical variances are entirely expected and wouldn't indicate anything genuinely concerning. These are definitely the least dramatic, most stabilizing outcomes.
On the flip side, here are the outcomes that would absolutely cause waves. Scenario 3 is the discovery of undisclosed leasing or swapping arrangements. Uncovering 50-year encumbrances, meaning the gold is secretly promised or owed to someone else, would heavily complicate the assumption that the gold is physically ours, shaking investor confidence significantly. Then there's Scenario 4, missing gold. Now, while analysts consider this highly improbable based on internal reconciliations, the entire point of an audit is to remove reliance on internal assurances. Even low-probability scenarios require independent confirmation when $500 billion is on the line.
And there is one more massive hurdle to keep in mind. An audit must also carefully differentiate U.S. reserves from foreign-owned gold held in these same vaults. See, since World War II, foreign nations have stored gold in America for safekeeping. Disentangling exactly whose gold sits where is absolutely critical to avoid diplomatic friction, especially as nations like Germany have recently moved to repatriate their own physical holdings from abroad. The global trend right now is moving heavily towards strict physical verification.
Which brings us to the ultimate question on our final slide. As central banks worldwide rapidly accumulate and verify their own gold, and as the U.S. navigates unprecedented national debt, we have to ask, after 73 years of secrecy and unverified assurances, what do you think is really inside the vault? When the dust finally settles and a true independent audit is completed, what will Fort Knox reveal? It's a fundamental question of physical credibility, and it's one that a growing number of people believe we simply cannot afford to leave unanswered any longer.